See what he thinks.
We're officially live. I don't know where Mike is, so we'll wait for him to come on. So for our listeners, I tested positive for the coronavirus. So I officially have the coronavirus. I'll keep everyone up to date. On probably day 3.5 of symptoms. And at the moment, at least, I don't feel too bad. I just, feels like I have a little bit of a cold, a little tired. Mike, nice haircut, nice glasses.
Thanks. This damn laptop, I don't know, I locked out of it.
That sucks. I was just telling Dad, Mike, I tested positive for COVID.
Really?
Yeah.
So hopefully it's just a mild case.
Yeah, that's kind of what I'm hoping.
What is this with the Rolland group COVID stuff going on here?
Oh, with Corey first and now me. Yeah, look, I mean, it's hopefully not that big of a deal. I don't think it will be. So whatever. So anyway, market. Let's dive into it here. It's June 17th. Quick recap of yesterday. Market opened up almost about 1,000 points. For a moment, looked like it was going to give it all back, and then came back, and then gave it up a little bit. And then I thought the finish was pretty strong. I don't know what you guys thought. There's no doubt that it seems like for the past couple of weeks, every time the market's open, it seems like a lot of the activity that happens is pre-market, and the market opens big, and then it kind of seems like what's been happening is throughout the day, it slowly gives up a little of the gains it has in the morning. And like I said yesterday, in my opinion, I thought the close was somewhat strong, but here we are. Market looks like it wants to open up about 200 points today. Dad, what are you looking at? How do you look at yesterday and the overall market right now?
Well, yesterday was a real surprise. I mean, yeah, it was up at one point 1,000 early on, right before the opening. And as you said, it worked its way lower. The most interesting thing to me is when it almost went flat on the day after being up that much, and then immediately came back. There is still so much money on the sidelines. I was reading the Wall Street Journal a bit this morning. Money market funds are through the roof. I think people are just realizing that when a couple of months ago, before all this started, you were actually getting a return finally on your money market of over 1%, or at least 1%. And now we're back down to close to zero. And people are starting to really realize there is zero return in money markets, zero return in bank accounts. So slowly in the back of people's minds, they say to themselves, I got to get out of money markets. Question is, what do you do with it? Maybe some of those people are going to buy a house. Other people are worried about their jobs, so they'll just keep that money aside. But there's going to be quite a number of people who are going to continue to want to be in the stock market, and they're probably looking for dividend stocks of some kind. But I think that's an overall trend that we're going to see is the background for what's going on. And it continues to put a bid under the market. Yes, I had shorted Zoom. I got stopped out right away, and it looks like it's higher today, so I'm done with Zoom. I'm not going to play that one from the short side, at least in the near future.
Yeah, that could be dangerous just because who knows how much higher that goes before reality sinks in. A question that I have for you, and I know we've talked about it a lot, is I guess my question is, are there certain things that you like to look at to determine whether or not a market is overvalued and undervalued as a whole? And do those things maybe, I don't want to say go out the window, but change when things like interest rates are so low and historically other places that used to be safe havens for a return on your money no longer is?
Yeah, I think a lot of it is what is competing with the stock market at any given time. And when rates are extremely low, you don't have competition from the bond market. You might have competition in areas in the bond market, like high yield bonds, could be something that people will look at as an alternative to stocks. But that's the first thing I think you got to look at is where is the competition for stocks. Then people say, okay, let's look at the PE ratios. You could throw all that, the PEs, out the window because everything is like an accordion and it's a moving target. And there's times when the market has very low PE in general, and other times it goes the other way. And it doesn't necessarily mean that low PE stocks are going to win out the day. You know, it has a lot to do. We've talked about this a lot. It has a lot to do with the growth stock. If a company's growing at 30% and your PE is 20, that's a good deal. And, you know, vice versa. You could have a PE of 10 and the company is growing at 3. So you don't want to be necessarily in those stocks. So it's not any precise way to look at it. But in general, I think it's competition with other markets.
And for our viewers, PE is just price to earnings. And historically, some of the best investors in our day have always kind of gone off of the notion where if a PE falls below 15, oftentimes it's a good buy. And if it goes above 15, it might be overvalued. But it seems like in recent history, those numbers have fluctuated a lot. And if you're waiting for PEs to fall below 15, you know, you're never going to be in on certain companies like Amazon or Google or these big growth stocks that just never have PEs that low because they're growth stocks.
Right. And you have to take a look at a company like Amazon that might have a PE of 50 or 60. I don't know what Amazon is these days, but it's usually growing at a much greater rate than whatever that PE is. And that kind of gives you comfort. The problem is if all of a sudden they come out with an earnings report and they're not growing anywhere close to the numbers that people are paying for the stock. And that's where you see every now and then a growth stock dropping 15, 20% in one day because something didn't go correctly in the calculation of what people were expecting, right?
Yeah, and the reason that I originally brought this up is because, you know, everyone lately makes me want to, you know, trim stock and be a little bit more in cash because let's be real, Warren Buffett isn't an idiot. And lately a lot of people have been mocking him, saying that he's washed up, saying that he doesn't know what he's doing. And I was looking into more how he analyzes markets, and his number one indicator is essentially market cap to GDP, which is market cap to gross domestic product. And normally what he's always looked at is if it is over 100, it's possibly overvalued. If it's under 100 and even more so closer to 50, it's super undervalued. And anytime it's reached 150, it's beyond overvalued and due for some sort of correction, and normally a year out sees declines from where we're at today. And right now, the GDP is that number is at 148. So it's almost the highest it's ever been. In 2000, during the dot-com crash, it was at about 150, which is where it was at last week for a brief moment before it had that huge sell-off. And now it's basically right back there. So you have guys like Warren Buffett and guys who have been using the same indicators their whole life who look at it like eventually things turn into what they're actually supposed to be valued at. And that's where these bears keep highlighting the fact that that number is as high as it's ever been. And historically, when it gets to this point, you're due for some sort of massive sell-off, which is what we saw last week. But now it's basically almost right back to where it is. And I mean, do you ever look at those things, Dad?
Yeah, no, I don't. But, you know, think about, you know, Warren Buffett can only go into massive sized companies. So he's so limited in the type of investments he can do. And it takes a very long time for him to get in a position for the most part. And that is a complete disaster in the market. And someone is saying Warren Buffett's my last resort. And, you know, the company will make a deal with him. But most of the time, it takes a lot of time for him to get in and out of a position. So for him to make moves in the market, he's got to be thinking along these terms you're talking about and ready to take the brunt of anything that might come along. For us as small-time investors, we could get in and out quickly and not have those same concerns that he has. And still, over the long term, he's holding a ton of stocks through all these events. You know, he doesn't just go to zero. His holdings are immense, and that is not going to change. He might have small fluctuations within those immense holdings, but over time, he just holds stock, and he holds a lot of good stocks, obviously.
You don't think there's something to be said for the fact that that number is basically as high as it's ever been, and it's never really been able to get higher than 150 without a massive correction? It sounds like you think maybe this time's different. Maybe it can get to 175. Maybe it can get to 200. Who knows?
I mean, history is great until it's not. Like that, we saw the tsunami disaster in Japan with the reactors a decade ago. They were going off historical data, and that's what screwed them. So I always kind of take that stuff with a grain of salt because history repeats itself until it's written again in a new way. So, and then there's a new benchmark. I think we're in a different era. And even going back to Warren Buffett, I think his strategy isn't as sensible as it was a couple decades ago with being in these staple holdings and not really having flexibility. I know it's different with the size of investments he has to make for shareholders that are under his wing. But when push comes to shove, for individual investors, like Dad was saying, there's way more flexibility. And I think it's easier to kind of navigate through times like this when you're not responsible for so much wealth.
Makes sense.
Yeah, and we had a complete shutdown of the world. So
but let's keep in mind with that, people weren't spending money. I don't think that's talked about enough. People are wanting to spend money right now and doing stuff. So that's why we've seen an uptick in like the Pelotons of the world where consumers want to consume. There's been a lot of people that I've talked to many people that have saved more money the last few months than ever, where they're just like, oh man, I've had no credit card bills. So I don't think that narrative's been brought up enough. We've talked a lot about the lockdown and people being out of work. How about the other end of that, where people haven't spent money? So that's part of, I think, where there's some bullish activity here. You've got people with money that want to put it to work.
Well, that explains also why money markets are so high, right? I mean, that's part of it.
And Dad, what does that mean? I mean, maybe this is a dumb question. Like when you keep saying money markets, I don't really know what that means. What does that mean, money markets?
Well, I mean, money markets are pretty much a savings account for most people. I mean, when you have a brokerage account and let's say you got 10,000 in that account, it sits in cash. And most of the time you put that in a fund that invests in short-term securities, like overnight kind of maturities, and gives you a rate of interest while you're waiting to do something with that money. It's pretty much as good as cash, at least historically. There is risk in it, and there were issues with it in 2008, but they have never let the money market go below $1. And, you know, it always trades at $1 and gives you a rate of interest based on all the overnight money that is rolled over by the banks every single day. And, you know, as I said, it was up to almost 1% or a little more than that. And now it's close to zero.
Which forces people to want to buy stocks.
Yeah, but think of a money market like a savings account at a bank. It usually pays more than a savings account. They're both paying about zero now.
So yeah, they want everyone in the market when you think about it. That's what that does. It just pushes conservative thinking into, okay, well, if I can't accrue anything from a savings account, I might as well get in a dividend stock.
And yeah, Mike, I'm glad you bring that up because that's definitely something that Dad always talks about that I never really hear on TV when people are talking about market valuations and whether or not they're overvalued or undervalued. A lot of the times people are going off of historical data. And Dad, your biggest bullish argument for really the last decade is, or at least the last 5 years, is where else are you going to put your money? Where else are you going to get the returns that you could possibly get in the market? And that didn't used to be the case, whether it was CD accounts or whatever it may be, everything was just higher. So there were just different places. And that's why, I mean, I think it was whenever I was in China when December, it was either 2018, I think 2019, when, you know, it looked like the market was really in for some turmoil in that December period. Something that you were looking at were the interest rates. And you said that they were starting to kind of creep up to the point where there was possibly a lot of money being reallocated from the market to bonds and treasury yields because the interest rates were starting to get to that point where they can compete with stocks. And that's just, it's gone the complete opposite now.
Right. That's exactly right. And that's where I talk about the competition for stocks. Where is it?
They don't exist.
Yeah, it's high yield bonds and, real estate maybe.
But even when you look at all these rates, it still doesn't compare when you run the math. It's very tough to find something outside of a stock like a BP, for example, regardless of where it's trading. When you look at its dividend, comparing to a money market account,
but actually,
it makes sense of.
I'm glad you brought up BP because I was going to mention that today. They are, I've been kind of thinking they were not going to cut their dividend, but they recently wrote off some assets that change all their ratios on how they determine what they pay for their dividend. And most likely they're going to have to cut that dividend now. So it's probably in line with other oil companies. So my guess is you're going to see BP, which has about a 9% yield now, to probably go down closer to 6%. And I don't know when they're going to do that, but I'm expecting that. And I actually don't think the stock will react negatively to that.
And I mean, I think it's also important to acknowledge that BP, and I don't know the exact date, but I've been a shareholder of BP for the last 4 or 5 years. And historically, their dividend, I'm pretty sure, is closer to 6. Like right now.
Yeah, definitely.
Yeah, right now it's a lot higher than it normally is. So, I've always heard that anytime a dividend gets this high, it's not necessarily sustainable, or it could be a red flag.
It's just to try to keep people in the stock short term. I think that's part of it. So
well, BP is a British company, and they feel a lot of obligations to people that are on fixed income in the United Kingdom, and that's why they've kept that dividend high, even when they should have lowered it. But I think,
let's be real, it keeps people there too from getting out of the stock that would have.
Yeah, but that's just one example. But there's a lot of good dividends out there. You could go through a litany of stocks, and you'll find many companies that are paying well over 3% that are safe dividends. What's that, Mike?
Vion.
Well, Vion is a foreign company that pays a ridiculous dividend, and part of their charter is to pay out as much cash as they can. And I think the reason for that is the owners of the company have a ton of stock, and that's how they get paid, through the dividend.
Maybe we should just dump all our money in that then.
I don't know.
I mean, it does seem like it's been acting better.
Yeah, it is a nice chart now, but it's a very risky stock, VEON. We talked about India yesterday, and I found a couple of funds if anyone wanted to play India as a country. One is FLIN, which is the Franklin Templeton India Fund, and
I love that.
It'll replicate like the top companies in the Indian index. So that would be a good way to play it. And INDY is another one. So those are two, if you just want to play the country of India, That's a good way to do it.
So this is the first one. Let's look at this real quick.
Yeah, and the chart looks familiar. It looks like about 80% of every company you look at right now.
It seriously does.
It's the same chart as the market. It's been trading with the world, basically.
And yeah, and if you do a little bit of research here, you could look at, and I'm not going to do it right now, but you could look at the different companies they own and kind of look into them to see if it's interesting. What was the other one you said?
The other one was INDY, which is just a different group of companies from India, but it's the same thing. It's the same idea, same kind of chart.
It's wild how all these charts are so similar.
Yeah.
I'm waiting for that hot India startup company, like the Twilio of India, to start up, where we hear some sort of movement out of Bangladesh or something.
Yeah, I'm sure they have a lot of those. We're just not in touch with them.
Yeah,
I know. We got to figure out how to make that happen, because there's no doubt there's going to be some big winners out of there in the next couple of years.
I'm sure there's some services that you could subscribe to that'll give you all the information about like all the different companies going on in India. I'll try and look some of those up.
China's demise is going to be huge for India. I'm very bullish on them for the next couple decades.
So first off, Dad and Mike, have you guys made any moves pre-market or post-market from yesterday or today?
No.
I had a bunch of sell orders out there. Nothing hit. I guess the big news, because we've been talking about DraftKings almost every day on this thing, is that they're doing a stock offering of 33 million shares, and the stock got hit after market for about 4%.
Well, wasn't that a lot of that just investors taking profits off the table?
Well, yeah, but the point is they're diluting, the number of shares outstanding. I didn't look at the deal per se, but basically what it does is it just adds a ton of supply to the marketplace. So it's going to take a little while to absorb all the new shares. But I don't think it changes the theme that Danny was talking about yesterday.
It doesn't.
So, Dad, on a situation like that, what's your suggestion to somebody that wants to get into DraftKings? Would you jump on that on this news, or let the dust settle?
Mike,
I think this is a great buying opportunity where maybe it was oversold a little.
Yeah, I don't know, unless you're on the inside, you don't know how well that stock offering is doing, or I don't know when they're doing it, maybe today, or maybe it will be a couple of days. But if you like the company, I would buy maybe a little bit before the deal and a little bit after it starts trading with the stock in there.
And if you follow DraftKings pretty closely, which I have been the last couple months, it's one of those you can't keep a good man down type of stories where as soon as the stock gives up anything, buyers rush in. I mean, after hours yesterday when they announced this, the stock was down 15%. And right now it looks like it's going to open only down a little. So it wouldn't shock me if that stock closed positive today. I think anyone who jumped on it after hours yesterday could have turned a quick 10% profit before the market even opened today. And that's just kind of been the story of DraftKings really since it became a public stock. Similar with Penn, anytime those companies get beaten down too much, unless there's some story, and you can look to see if there's news, but when there isn't, I mean, these stocks are coming back with a vengeance anytime there's a sell-off. So if I wasn't so long on DraftKings, I already have as big of a position as I want to have. I would have loaded up yesterday when that was down 15%. I think it was trading at like 37 and change for a little. I did not think that was going to last. Mike, I even texted you about it, obviously.
Yeah, you did. My hesitation is just the whole sporting environment right now with this whole, are we going to actually have full seasons? Is there going to be some sort of bullshit popping up with, politics like we've seen in the MLB where there's egos that just can't get things done? I think there's a lot of what ifs in the sports world, and DraftKings I love, but I want to see things actually get back to full capacity. Like, is that happening this year across the board?
Well, keep in mind, it's almost bullish for DraftKings if things don't get back to full capacity, but sports happen.
Well,
Like,
no,
you
I'm more
look-
talking about the full seasons, like athletes not running into any issues on the field, in the arena. I'm not talking about the crowds. I'm talking
Yeah.
about the sport itself.
Look, I think part of the appeal right now to not only DraftKings, but the whole market in general is right now we're in this period of speculation and hope where it's almost like you want to sell the good news. Like, for example, let's say next Tuesday they announced that a vaccine was official, and maybe that causes the market to rally 2,000 points. That's when I would start selling all my positions, because that's when it's like, all right, at this point, there's not really that many good headlines that could follow. Right now, there's so much speculation and so much hope, and things still have such a long way to get back to normal that every ounce of good news is going to keep pushing this market higher until it's all baked in. So I almost think it's a good thing that there's this big unknown regarding sports and regarding the reopening of so many things, because it gives speculation and hope to these markets. And once all the good news is baked in, that's when maybe you start seeing some serious profit takers. That's my opinion.
Yeah, and one other note on the DraftKings is it takes away money for the whole group of gaming stocks because it has to get absorbed. So it probably puts under pressure, Penn Gaming and a couple of the others, because there's only so much money that is looking at these stocks at any given time. So the supply will probably keep all these stocks, from going, too far north. The other thing to keep in mind is Penn might be another stock that wants to do a stock offering. They're probably watching DraftKings very closely to see how well it does. And it wouldn't surprise me if they announce a secondary offering at some point in the next few weeks.
Penn has really had literally a V-shaped recovery. I mean, it's insane. They bounced back probably more than any other company that I've seen, other than like the top NASDAQ names that are at all-time highs. But this chart is insane when you really look at it. I mean, for a while, when you look at
Yeah, I should have just put all my life savings into that company back in March.
Yeah, I mean, I don't know if we lost Danny or I'm just not hearing him. Do you hear him, Mike?
He froze.
He froze. Yeah, I think that you back, Dan? We lost you there for a minute.
Yeah, I think I'm back. No, I was just saying that it's remarkable to me how much of a straight line Penn went up once it like passed that 15 level. I've just never seen anything like it.
Yeah, that was quite a move, no question.
Yeah. So
guys, stocks of the day. Dan, what are you liking?
So I've still. Dad, why don't you start? Because I got to think about this for a second.
Yeah, I talked about McDonald's before, and I keep hesitating and trying to buy it, and I keep missing it. I really think McDonald's is going to gain market share from so many restaurants closing and people feeling more comfortable with fast food over going and sitting in a restaurant.
Well, and the whole Beyond Meat thing helps them a ton because, you have that whole narrative.
Yeah. It may, but I feel like, Mom and I are going to be going on a road trip soon. And I'm thinking, okay, we'll just stop at places like McDonald's on the way up. She's giving me a look right now like I'm not eating there.
Mom is never going to be down with that.
But I'm telling you, I'd rather stop at a McDonald's than go into a sit-down diner.
Yeah, but Dad, that's always been you. You used to love going to Stewart's root beer back in the day. Way before.
Yeah, well, I don't know if Stewart's is public, but
yeah, but you know what I mean. You're a guy that loves that naturally.
But I'm thinking McDonald's for a medium-term play, not, a day trade. It's really hard to pick a stock just for a trade today.
Yeah, I know. I'm not. I honestly don't. I'm gonna just kind of wait. I don't have any specific target today. I got so much stuff going on. Like I sold out of my ALGN position yesterday after a nice run up. I figured it was time to move on from that.
That's Invisalign.
Yeah. great company. I made some good money. I was in it over a year, and I know Greg Aronson works there, so that hit close to home. I know they have some great things coming up. I still think it's a great stock. I just was ready to move on from that for now. But yeah, I think that, like I was saying yesterday, when you look at the tech stocks like Facebook, it's run up a lot the last week again. I just think where we're heading into the election season, and what with people being locked down the last few months, more and more people have been joining communities on Facebook. And I just think that they are, if you want to have one of the fangs that if you're not in any yet, I highly suggest Facebook. I think they will return all of the other companies in that realm, even Amazon, the next decade. I really think they're the true winner there. And there's tailwinds are gone with the politics. We've seen the regulation stuff. Now they're starting to hit Apple with that. That started coming out today. So
interesting. Yeah, I mean, I know I've been talking about them a lot, and I'm still waiting for them to have their breakout move. I'm hoping it happens soon. Take-Two. I mean, they've been trending neutral at this like 136 to 138 level. I think they could break out and get to all new highs at 150. I love the CEO's interview. You know, they own the Grand Theft Auto franchise. They make a lot of video games. Also, real quick, I know I told one of our viewers we'd touch on this, but you don't need to always day trade. You could swing trade. And the biggest difference is when you swing trade, you're not committed to getting in and out in a day. So Take-Two, you know, I loaded up on Take-Two and it dropped below 130. And when I say swing trade, I'm hoping it can get to 150, and that would be the swing. Whether it takes a month, month and a half, 2 months, I'm not committed to getting out of the position really until it does that. I also only do those types of trades with companies that I'm comfortable owning. So I don't see Take-Two like falling off the map like some of these day trading stocks like Genius, for example. But that's my pick of the day. I'm also probably going to exit my Costco position and try and just find something that's performing better.
Yeah, that thing's been dead weight.
Yeah, it's just fucking neutral, and I'm even on it. And I think there's more aggressive stocks that are moving more actively, and I'd rather have my money in that. So
Costco is a long-term holding. That's not a short-term thing.
It is, and at the end of the day, I have enough long-term holdings with other names that I like. I want to be in stocks that are showing signs of being just movers, and that's
why I haven't touched Activision Blizzard. I hate these stocks that just don't really move. They bore the hell out of me.
So that's it, guys. Let's have a good day.
Fair.
All right.